Okay, thank you for your time. I'm sorry I have to speak in English, but hopefully that will not be a problem. So my name is Chris Tang. I'm a portfolio manager at Lloyd George Management, which is an investment management company. So what I'll do is I'll talk about what is an investment management company, the different types of funds within an investment management company, my role in the company, and how I got to this role, and I think what the skills set is needed to be good at investment management. So let me first start off what is investment management. It's quite simple. Basically, we manage money on behalf of our clients. Hopefully, we can get a decent return by investing into various assets and investments. Within the investment management company, there's four key units: the investment team, the client servicing, the operations, and compliance. I myself is in the investment team. I'm one of the portfolio managers within the investment team. The other staff in the investment team are mainly the research analysts, which does all the research for the company and help the investment managers make the decisions. Other areas include client servicing. So who are our clients? Our clients are mainly institutional as well as retail clients. What is institutional? These are basically sovereign wealth funds, the MPF that people put their savings in, insurance companies, and also family offices. These are larger clients that we have, but we also have retail clients, which are the individual clients, mums and dads, and also high net worth individuals. All these clients basically give us their money for us to invest in. The client servicing team basically is to help us source these funds and these assets for us to manage. They also provide reports to our clients on a regular basis to update and to help us provide reports to our clients in order to monitor our performance. In operations, it's basically our staff who manages the trading, the buying and selling of shares, and also any inflows into our investment management, and also redemptions. So these staff basically helps us with the general operation of an investment firm. Compliance takes care of our legal side. So these are compliance staff, legal staff that helps us manage our funds. Our funds are regulated by various institutions and regulatory bodies, such as the SFC, the SEC in the US, and other regulatory bodies around the world, because our funds are global. So these staff helps us to monitor on the regulatory side. Now, for investment management, different clients have different needs. So it is important for us to understand what the client needs, what the risk that they are able to take, and help them to make a reasonable return that is hopefully above the market. There are different types of portfolios that our firm manages, and each firm is different in terms of the way that they manage. There are various asset classes, such as equities, which is the basic cash equities, as well as derivatives. Fixed incomes, which is another word for bonds, pretty much. And also alternative investments. This is private equity and direct investments into companies. Our firm at Lloyd George Management focuses on just equities. And there are different markets of equities that we invest in. These are developed markets, emerging markets, and frontier markets. Developed markets are the more developed countries, such as the US, UK, and in Asia, Australia, Singapore, and Hong Kong. Emerging markets are the countries that is more developing, such as China, Indonesia, India, Philippines. Frontier markets are one step below the developing markets. So this would include Vietnam, Cambodia, and also countries in Africa as well. Our firm specializes in the emerging markets and frontier markets around the world, and our office in Hong Kong is mostly related to Asian markets. And there are also a various strategy as well within an investment management firm. Fundamental is basically doing research on individual companies and finding companies where we see there's value and investing in those companies. There's a lot of analysis that's involved, and basically our research analyst is the one that helps us to look for these companies. There are also other investment management firms which focuses on different funds, such as global macro. So this is basically investing depending on the macroeconomic situation. For example, investing according to the depreciating of the yen, or for example, conflicts in the Middle East or potential war in the Middle East. How would that affect different shares and different markets? Quantitative funds are basically looking at different valuations of a particular asset. This is more mathematical based. A lot of the staff within the quantitative funds usually have mathematics degrees. There's a lot of formulas they need to generate, and they work usually they build and generate models in order to find values and arbitrage within those valuations. Another strategy is event-driven. This is more related to potentially merger and acquisitions. For example, how does a Canadian oil company gets affected in terms of valuation if a Chinese oil company announces a bid for these Canadian oil companies. So these are various strategies. The firm that I work in are more focused in the fundamental side strategy, so which is looking at companies on an individual basis and finding what is good value. Within an investment management firm, there is also specialty funds. So there are funds which just focus in various sectors, such as the property sector or the resource sector. High yield, these are companies which generate higher than above average dividend yields. And also there's country funds that focus in a particular country, such as a China fund, India fund, or Southeast Asian fund. Small cap fund is a fund that basically focuses on smaller companies, hopefully to generate higher return than the large cap companies. So what I will talk now is basically my role in the investment management firm and what my day-to-day role is. So there's two key things that I within my day-to-day work. One is to monitor the existing assets that I hold, and two is to generate and find new ideas. That would involve the help of my research analysts. They do all the fundamental research, look for the new ideas, and basically communicate that to the portfolio managers. So communication skill is critical for our research analyst. Also, I need to be up to date with the markets. That involves, understanding the news, not just reading the news, but understanding how that would affect various companies and various sectors at a given point of time. I also work with a lot of the investment team, investment banks, the research department of the investment banks, as they provide also detailed research on individual companies. So very often I speak a lot to the cash equity sales team within an investment bank. In terms of how I got to this role, I studied in Australia and graduated with a degree in business. I actually started in an accounting firm. So my first job was not in finance, but was in accounting. Now, I feel that accounting is quite important within the world of finance as well. It is important for my current job to able to understand how to read the annual report, how to read the financial statement, understand what drives a company's earnings, and understand how the future earnings will be affected by its balance sheet, by the amount of cash it has, by the amount of borrowing it has. So accounting skill, I find, is very critical. I spent 5 years at an accounting firm in Sydney and in New York before I moved to Hong Kong to Lloyd George Management, and I started a role as a research analyst, looking at the Australian market. Before spending about 3 to 4 years before moving up as a portfolio manager, managing a natural resources fund, and now a regional fund, which basically invests in Asia Pacific countries. So this would include countries from Korea to China to Indonesia, Malaysia, as well as in Australia. There are, that's just one case. There's also other cases in terms of how we hire our research analysts. Normally, our investment team comes in as a research analyst, develop their skills for 3 to 5 years, and if they are good at the research they do, then they are given the responsibility to manage a fund and to manage a portfolio. Some of our research analysts are from the investment banks within their investment banking department or in their research department. So they already have prior experience into researching and analyzing companies, which is the critical skill that you need as a portfolio manager. Other critical skills that is important as a research analyst to develop, or even before you become a research analyst, is in the area of finance and, as I said, accounting. So this includes financial valuation, understanding the different types of methods to value a company, understanding which valuation method is suitable for a particular company or for a particular industry. Quantitative analysis is also important. This is related to the mathematical side, the probability side. We have to apply, because we can't read the future, we often have to apply what is the probability of a certain thing that will occur for a particular company. For example, what is the likelihood of the oil price going up or going down, which may affect our investment in the oil sector. So quantitative analysis is quite important. And as I mentioned before, financial accounting is important. You need to understand how to read a financial statement. You need to understand whether the company generates quality earnings and understand the cash flow of a particular company. Economics is also important as well. You need to understand what drives the sector, supply and demand. You also need to understand more macroeconomics. How does each country gets affected by its currency, by its trade balance with other countries, basically by the debt that a country has. The last few years, we've seen a lot of countries that has gone into trouble because of the amount of debt, sovereign debt that it has. And we have to understand and analyze how each of these countries affect the investment within our portfolio. Behavioral finance, which is more the element of psychology, is also very important as well. As many of you understand, the stock market moves up and down, and it can be very volatile. And often it is oversold or overbought because driven by humans having fear and also greed as well. So you have to have common sense, understand the valuation of the company, and understand sometimes the stock market can go down more than it should. So behavioral finance helps you to understand how a human thinks. And this is important in order to make an investment within the portfolio. There are a number of courses which the Hong Kong Securities Institute manages, which is quite important in these areas as well. Another important membership I have is within the CFA as well. This is also important, and it's quite common in the industry. So I would highly recommend you to look at some of the courses that is run by CFA as well as the Hong Kong Securities Institute. They provide regular training to update you on the various elements that you might need in order to be successful as a research analyst as well as a portfolio manager. So just to sum up, investment management, most of the time there's two areas that we hire from as a graduate and also an experienced hire. Most of the time we actually hire from the investment bank and also from the research department as experienced hire. But we also, from time to time, hire from graduates as well. So as I have mentioned before, those are some of the qualities that you might need. And most important, what we look for is common sense as well as the ability to manage high pressure environments, because this industry and the stock market can get quite volatile, and one has to stay calm and have their thoughts collected in order to make a sensible investment decision basically on a daily basis. So that basically sums up my presentation.